Hey everyone, welcome to another episode of It's the Economy Stupid, where we take the week's biggest data driven stories and turn them into easy, no jargon conversations. I'm your host, Kashish Kapoor. We'll walk you through this week's key data points in quick, snackable bits, and if you'd rather read about it, we've got it all neatly wrapped up in our blog too. This week, we have three stories for you. First, India's foreign reserves. Why did they just see the steepest weekly drop in history? And what's the RBI up to? Second is about China's rate freeze. The Chinese central bank isn't cutting rates, but what does that really mean for world's second largest economy? Third is about chaos in the telecom sector. Wireless subscribers are jumping ship while fixed line broadband is booming. What's driving this switch? First off, this week's data raised some eyebrows. India's foreign reserves fell by a record $18 billion in just 1 week, marking the steepest decline since data tracking began in 2001. In the last 7 weeks alone, reserves have shrunk by $50 billion or nearly 7%. To put it in perspective, this kind of fall was last seen during the 2008 financial crisis, when the global economy was in a free fall. But the world isn't falling apart this time. So why are India's reserves? Turns out the reasons this time are homegrown. First, there's massive foreign portfolio investor sell-off in the Indian equities. We've covered this plenty of times before. But the second, and more importantly, it's the RBI's changing playbook. You see, historically, the RBI was okay with rupee weakening gradually in an orderly manner. But now the central bank has been aggressively defending the rupee to the point where it's outperforming most emerging market currencies. To put it into perspective, the Indian rupee has moved just 0.6% against the US dollar over the last 3 months, while currencies like Russian ruble and South Korean won have slid 12.4% and 5.1% respectively. With the US dollar rallying after the Trump win, the figures could be worse for the Indian rupee, but that is not the case. The INR is holding strong because the government is dipping into its foreign reserves to fill all the demand that is coming for US dollar as INR is being sold. RBI is buying all these rupees, spending US dollar from its foreign ex reserves so as to not let this affect the exchange rate. But why this sudden urgency to defend the rupee? It comes down to inflation. A weaker rupee makes imports more expensive, which fuels inflation. With food inflation already high and core inflation creeping up last month, the RBI cannot afford to let the rupee weaken further and add another layer of price pressure. Losing control over inflation would severely limit RBI's ability to manage monetary policy effectively, and that's a risk they are clearly not willing to take right now. For the second story, let's talk about China. For the second month in a row, People's Bank of China, that's PBOC, decided to keep its loan prime rate, LPR, unchanged. While some were hoping for a rate cut given the growth was stuttering and inflation was well below 1%, this move didn't really surprise anyone paying attention. It has kept 1-year loan prime rate unchanged at 3.1%. See, here's the thing. Lowering interest rate probably won't have fixed the big problems plaguing China today in the first place. The real issue isn't the cost of borrowing, which is a supply side problem, but a lack of willingness to spend and invest, which is a demand side problem. Consumers are saving more and spending less because they're worried about job security and economy stability. On top of that, the fear of further drop in real estate prices is making households reluctant to spend or invest, even if borrowing becomes cheaper. Simply cutting rates isn't enough to solve those issues. If China is looking for answers, perhaps fiscal policy is the right place to look. Unlike rate cuts, which only make borrowing cheaper, fiscal policy can directly inject money into the economy. Think about cash transfers, tax cuts, or subsidies, basically putting money straight into people's hands so they feel confident enough to spend instead of saving for a rainy day. With everyone feeling jittery about job security and real estate, these kinds of moves may give demand the much needed boost to get things back on track. Finally, talking about the chaos that is happening in telecom sector. In the telecom world, it's been a rough few months for wireless operators. September saw a whopping 10 million subscribers ditch their wireless connections, following a 6 million loss in August and roughly a million in July. And for the first time in a while, even Jio is feeling the heat. It lost 8 million subscribers last month alone. Meanwhile, BSNL is quietly having its moment. For the third month in a row, BSNL added subscribers 8 lakh in September, taking its total gains to over 6 million in just 3 months. At the risk of repeating ourselves, we've talked about this in the previous edition as well. The shake-up in wireless subscription can be traced back to the price hikes by private operators earlier this year. But what's surprising is the sheer scale and intensity of this trend. It's gone far beyond what anyone could have predicted. And why wouldn't it? You see, wireless services, particularly mobile data, have become nearly ubiquitous in India. With a penetration rate that covers the vast majority of population, wireless connectivity has shifted from being an aspirational service to a basic commodity. The price hikes by private operators earlier this year pushed many budget-conscious users to look for cheaper alternatives like BSNL. For these users, switching providers or even giving up secondary connection altogether is a straightforward way to cut costs. Unlike earlier when access to mobile data was limited and people were willing to pay more for reliability and speed, today the average consumer expects basic service at the lowest possible price. However, while the wireless subscribers are dropping, fixed line connections are actually booming. September alone saw 7 lakh new fixed line subscribers, the highest in nearly a year. Jio is leading the charge, adding massive 5 percentage points to its market share in just 6 months, even as BSNL loses ground. Wanna know one key reason for this steady growth? Unlike the wireless segment, the fixed line broadband space hasn't seen tariff hikes yet. This price stability has likely played a significant role in attracting new subscribers, especially in price-sensitive markets like India. That said, fixed-line broadband is often also seen as aspirational, a step up for households seeking better streaming, faster downloads, and more stable connectivity for either work or education. It's something people might be willing to spend some money on. But this logic will be tested if price hikes eventually hit the wired segment. Will it remain a growth story, or will we see same subscriber drop-off happening in the wireless? Only time can tell. That's it for this week's story. I'm your host Kashish, and I'll see you in the next one.